Kris McCusker joins us now from the CityNews 680 Business Center. Kris, the Dow Jones has been on quite a streak of late, but it appears as though it's come to an end.
Yeah, so the longest winning streak since 1987 at 13 days ended today. Now, had the Dow moved higher for a 14th day, that would have been the longest winning streak in more than 100 years. Instead, it dropped by about 200 points. Now, basically, good news moving the markets today. Better than expected data out of the U.S. has renewed concerns about higher interest rates. Shares in Meta, this is the parent company of Facebook, Instagram, and of course now Threads. That stock hit a one-year high today after at least a dozen upgrades after the social media company crushed earnings after the bell. We told you about that this time yesterday. Bay Street also pulling back today, even as oil closed at a fresh 3-month high. So it's back above $80. Our friends at Enpro telling us that gas prices will be going up 2 cents in the GTA as of tomorrow. Now, I think a few days ago I warned that we could see higher gas prices.
Here they are.
Here we go.
Yeah.
Yep.
Okay, turning to the Canadian job market, the search for workers seems to have cooled down.
Yeah, and this is a really interesting metric. It is the job vacancies, and the number of job vacancies in Canada stands at a 2-year low. So this might suggest demand for labor is cooling because of higher interest rates and strong population gains. The number of unfilled positions in May stood at 759,000, and that is down from a peak of more than 1 million in the same month last year. Now, Canada's job vacancy rate, or the number of vacant jobs relative to the total number of positions, also hit a 2-year low. Now, StatsCan says that we did see declines in 6 sectors, led by healthcare, social assistance, accommodation, and food services. And then vacancies increased in manufacturing, finance, and insurance, along with management of companies and enterprises. So take note of those sectors if you're looking for a job.
All right, and finally, secondhand shops have become quite popular these days. And this is interesting. A luxury brand now wants a piece of that action, Kris?
Yes, and we are talking about Canada Goose, and what's maybe perhaps most interesting about this, Erica, is that this program called Generations already existed in the U.S. So Canada Goose bringing its secondhand apparel business to Canada. This will allow customers to trade in pre-loved Canada Goose wear for gift cards. So this, of course, includes everything to the iconic parkas that you see there on a very hot day, to knitwear. The company president says they are bringing the program to Canada to further its commitment to sustainability. Carrie Baker also says they're looking to cater to the growing number of people seeking secondhand goods, including coveted shoppers under the age of 30. And in this day and age, with inflation being what it is, not surprising the timing here.
I agree. It's certainly not cheap to get a Canada Goose coat, but they do last a long time. So if you get it secondhand, I mean, not bad, right?
Yeah, well, it's worth looking into.
Yeah, exactly. Okay, thank you for that, Kris. That's business editor Kris McCusker.